I believe everyone has a remarkable ability inside of them. When I was in 4th grade, I wrote down that my goal was to play pro basketball. Growing up, I wasn't the most gifted athlete, but I was determined to become one. I took specific moves and ran them over and over, combination after combination. Faster, slower, higher, lower, day and night. I remember the joy I felt when I mastered each of them. Once it came time for the real show, I was ready for those big moments. Like taking the last shot. My confidence comes from my journey, my work, my recovery, my diet, pushing to go beyond where I've been.
Hey, what's going on, everybody? Welcome back to my channel. That was just a quick clip of Kyrie Irving. If you don't know him, he's an NBA basketball player, and he seems to be pretty on board with the Beyond Meat products and how they benefit him and make him feel and all that good stuff. Thought it'd be a fun video to make since I have a bachelor's degree in food science, so I'm a little familiar with what it takes to work in the food industry, coming up with the concept of a product, manufacturing it, and then ultimately selling it to consumers like myself. And my main goals for this video is to discuss what Beyond Meat's business model is and what they're hoping to accomplish. Then I want to talk about their valuation and look at all the numbers behind the company, their financials, to figure out if in fact this is a company that will make investors money in the future. And lastly, I want to talk about if I will decide to purchase this company or if I'm actually going to stay away from it. So I hope you guys enjoy this video and learn lots from it. If you haven't already, go ahead and subscribe and do me the biggest favor and head down to the little gray like button and make sure to click it to let me know that you enjoy this type of content. And also because it took me like an hour to get this little animation edited and uploaded, so greatly much appreciated. With that being said, let's get started. So if you're not familiar with Beyond Meat, they're basically a company that is producing plant-based products that look, cook, feel, as far as texture goes, and taste like real meat. They claim that their products are better for your body and for the environment than the actual meat most of us consume. Now they have several products out, like the plant-based patties for like burgers. They also have plant-based ground beef that can be used for meatballs as well as ground beef tacos, things like that. And they also have plant-based sausages, which I actually tried their spicy Italian sausage and I thought it was good, pretty good product. Flavor was good and texture was good. The only thing I wasn't really a fan of was it was kind of oily for my liking, and also the shelf life. It said that you had to consume it within 3 days of opening the package. So that's kind of the only drawback. I'm sure the R&D team out there at Beyond Meat is probably working on how to extend the shelf life of this product. So that's probably going to change in the future. Overall, I thought it was a good product. So let's start by looking at the fundamentals of the company, because that's kind of the most important part to kind of get a gauge whether this company is going to make investors money in the future, which is what this whole channel is all about, building wealth. Let's start by looking at the graph of this company just to see what the stock price has been doing lately. Basically, it IPO'd, meaning that the company went public. IPO stands for initial public offering, which means that when a company goes public or when it IPOs, that just means that investors or regular people like yourself and I can now invest in the company. So from this graph, you can see that it went public last May and immediately shot up to the moon. This usually happens when a company initially goes public because there's a lot of hype coming into right before the company goes public, which causes a lot of people to want to invest their money into the company. This causes a lot of buying pressure and makes the stock price go up. And as you can see from the graph, it just shot up immediately, within a couple months after it went public. It was just a straight peak, and then after that it started to crash down. The stock got all the way to $234, and then immediately after that it just tanked because everybody started to sell off, trying to take their profits and run. If you bought at the peak, then I'm sorry, because that's a terrible situation to be in. It recently bounced back a little bit, but in the past couple weeks, but it's still pretty low, which if you're a value investor, this may be a good opportunity to buy. So when we start looking at the valuation numbers and the fundamentals of the company, I quickly start by glancing at the PE ratio. For this company, Beyond Meat, their forward PE ratio sits at a crazy 272. This just basically means that if you buy this company at the current price, you're paying $272 for every dollar the company makes. That's just way too expensive for my comfort. But you cannot solely base it on the PE ratio of a company, especially one like Beyond Meat that just recently went public and is not just now getting started. You also want to look at their revenues. You want to look at their profits, if any. You want to look at their whole balance sheet, whether they have, what kind of assets they have, how many liabilities, any debts, that type of thing. And you also want to look at what they're projected or estimated to make in the coming year and in the future. So Beyond Meat has definitely increased its revenues year over year since before even going public, which is a good sign. You can see that they've at least doubled their revenue and really took off in the past year. So it's good to see that they've actually increased their revenue, but the revenue is the money coming in without taking in consideration all the expenses that it takes to produce the product, pack it, ship it, and sell it, and all that kinds of stuff. So in order to get the real picture, we need to subtract all the expenses, labor's being paid to all their workers out there, and taxes and all things like that, in order to get to the bottom line, which is the profit, or the money that the company actually gets to take home at the end of the day. The net income shows that they're actually been operating at a loss. They're definitely doing a good job of drastically reducing those losses in the past year, but regardless, still not profitable company. They are, however, expected to be profitable all of 2020, which is a step in the right direction. Their revenues are expected to grow at a crazy 72.5% this year, which will help them become profitable as they increase their revenues. So if you were to ask me if I would be comfortable buying Beyond Meat at its current price levels of around $110 compared to where it was when it peaked at $234, one could argue that it is at a cheap price at the moment. But for me, I would still have to say no for three main reasons. Number one is because this company is not profitable yet. I like to see that a company can be profitable for at least 2 quarters in a row before I start to consider putting my money into it. Number two is their PE ratio, which is extremely high, around 227. That's just too expensive for me to be comfortable putting my money into that company. And lastly, number three is this Beyond Meat does not pay any dividends, which is totally fine. I don't even want them to pay dividends because right now their main focus should be in becoming profitable. If they were to be paying dividends right now, you would have to wonder where is that dividend money coming from, because they don't have any, they're actually losing money. So where would they grab the money to pay their shareholders dividends? So for those reasons, I'm not interested in buying that company at the moment. I will definitely keep an eye out on it, but I just can't put my money in it just now. And that's not to say that I don't think Beyond Meat doesn't have a bright future, because I think it does. The consumer health trends are, trending towards plant-based products. More people are more aware of what they're putting into their body. They know that red meat is not necessarily the healthiest because new studies have come out and things like that. And also, a lot of these fast food chains are wanting to provide healthier choices for their consumers, so they've started to, test out their Beyond Meat products out on their menus. Like, for example, Burger King and Carl's Jr. have like their own Beyond Burgers that they're serving at specific states. McDonald's is a huge one that is trying out what's called a PLT, plant, lettuce, and tomato sandwich. Like I said, this is a huge opportunity for Beyond Meat because McDonald's is such a popular, world-known brand that if they can land a deal with them, I think it would increase their chances of becoming profitable faster rather than later. Like I said before, as of now, I'm not looking to buy Beyond Meat, but I am going to keep an eye on it. I think it has a bright future, and I'm excited to see where the company goes. Thought it'd be a fun video to make since I do have a background in food science, so I kind of understand a little bit about the principles that go into what it takes to create a product like this. It was pretty fun. It was pretty interesting. I hope you guys learned a lot about Beyond Meat and once again, how to go about analyzing a stock to decide and make an educated decision whether this is a company you would like to invest in or not. So with that being said, thank you so much for watching and I'll see you next time.